Welcome to Futures Fever, where we dive deep into the world of futures trading and uncover opportunities no matter the market conditions, because volatility is simply an opportunity to find profitable trades. So don't sit back and relax, but sit up and engage as Futures Fever, powered by Apex Trader Funding, starts right now.
What's up, traders? Welcome back to another episode of Futures Fever. I'm your host, Kevin Dubriske, and do I have a great episode for us? First off, we've been seeing some really odd range-bound price action, even though we have been trading at all-time highs on the ES, which is the S&P 500. We see that we had a bit of a stronger pullback on the NASDAQ. So we're going to go over these charts. We're going to go over different types of zones and levels we're going to watch going forward, and also geopolitically where we stand in the economy, because that's also going to have a big pull or push on the market. So let's break down some slides, tell you guys what is Apex Trader Funding, and later in the session I also want to cover how to use the gap fill trading strategy. This is a great strategy to use, especially given choppy price action. So let's break down some slides. Guys, good morning everybody. Hope you're excited for today. Let's pull up our slides right here. Wonderful, guys. So what's on today's agenda? How does Apex Trader Funding work? Live market insights, how to trade the gap fill, and we're also, of course, doing our giveaway. Guys, make sure you sign up for the free Apex Trader Evaluation giveaway. The link is going to be in the comments shortly. So why trade with Apex Trader Funding? Because not only are they the best prop firm available for traders, not only are they the cheapest fees available for traders, but they also give us the ability to not have to compound our contracts, but to be able to compound accounts. So in case if we're consistently trading and we're looking good, we're trading consistently and saying, okay, I'm risking 100 to make 300. This is going great for me. I'm able to take these trades cool, calm, and collective. If I take a losing trade or two losing trades, I don't oversize. I follow my rules. But every time I try to maximize my risk and increase it from 100 to 200, I keep taking more losses, I keep over leveraging, and I can't think straight. Well, Apex solves that issue. You could still trade the same account size, same everything, but then have multiple accounts copied to it. So psychologically, we're still risking 100 to make 300, but let's say we're on 10 accounts. Technically, we're risking 1,000 to make 3,000. So Apex Trader Funding gives traders access to funded accounts, removing the need to risk personal capital, get access to firm capital to trade the futures markets. I don't want anybody to be joining and saying, well, can I trade stocks? Can I trade Amazon? Can I trade Microsoft? Can I trade options? This is a futures prop firm. Futures are the better leveraged when it comes to trading, day trading at least, because there are also tax advantages for it as well. But that's something we'll get into another time. What's also great with Apex, guys, is you keep 100% of the first 25 grand you make with them, and you also earn a 90% profit split after that 25 grand. A lot of competitors are around 80-20 on the profit split, so it's great that Apex follows through with a 90-10. And of course, what's great with these prop firms, especially Apex, is the zero personal liability, guys. It's an efficient way to scale up. You trade stress-free. You're not risking your own capital. If you have a 50K account and you're funded and you blow 2,500 off of a few bad days, that's okay. Get back on your horse, get back on the bike, whatever it is, get back on your eval, pass it, and get right back to where you just were. That's one of the best parts of Apex Trader Funding, is that if you blow 2,500 of your own capital, then there's a good chance a lot of people are going to feel that, and then they're going to feel discouraged and not be able to follow through with their trading journey. With Apex Trader Funding, we're given that opportunity to say, I want to risk this amount, but I'm not really going to lose that amount if I trade this, right? So it gives us that ability to disconnect from our emotions. It's a 3-step process, very simple, guys. You pass the evaluation. So first step is the evaluation account. You want to show them that you could hit the profit target before hitting the trail stop. Then you get funded. They give you a funded account. You trade live using Apex's capital. Sometimes, I do want to mention, you won't see your orders hitting the book. When you get funded, I don't want you worrying that you're going to lose Apex's own capital either. A lot of times they do keep you on what would be considered a paper account, or a paper account, or an evaluation in a sense, but they do give payouts, right? And the reason for that is to protect their own capital. So once you hit a certain amount of profit in your trading with Apex, they have their own system behind the scenes that says, okay, this trader's been consistent. Let's not only move them to a live account, but let's also copy trade them on our own personal Apex trading accounts on their own side, right? So they could also profit when they find consistent traders too. So guys, don't think Apex is here because they want us to lose money. Complete opposite. Apex is here and their rules are here to help keep us in line so we can continuously make money and not stress ourselves, because the ones that get consistent are the ones they look to follow and copy. The ones that aren't just there yet, that's okay. They make enough money that they're not going to get mad at you for blowing an eval, mad at you for blowing a funded, get right back to square one. Step 3, of course, guys, once you get funded, it's really more of a 2-step process. An evaluation account and a funded account. Once you get on that funded account, you pass a certain threshold, you're able to take a payout from Apex Trader funding. Guys, let me know in the comments before we get started on the technical analysis portion in a little bit. What have you been trading lately, and what strategies have you been using with these range-bound markets? Now, something I want to mention, guys, is we've been seeing this chop, but geopolitically, what could be causing this is that there might be some new trade tensions because the US is going to speak with China next week, and that could help us sort of find direction in the market. But until then, markets are going to be range bound because they're waiting for the reaction. Guys, Apex is running a huge sale. I want you to use discount code FFEVER for Futures Fever for 80% off all evaluation accounts. The sale ends in 2 days. 80% off, huge sale, only about $33 for a 50K account. I believe it's like $29 for a 25K account. Really a great sale and fantastic opportunity. They have $50 resets on all accounts as well. And your lifetime one-time performance account fee, that's your PA account, your funded account, is $140 for a lifetime. And that is on all accounts. This is a major sale, guys. Definitely want to take advantage of that. Apex has paid out over $532 million in the past 3 years. Guys, that is mind-blowing how much they've paid out and how much they are still profiting as a company. They're not going anywhere. They're able to pay out this crazy amount of money, and they're able to stay consistent. Guys, there's the link below in the comments. Fill that out for a chance to win a free Apex Trader evaluation account. Last week's winner was Albert. Guys, Albert, congratulations. Join us live every Wednesday at 11:30 a.m. Eastern for a chance to win. Hopefully soon we'll have Peter Tuchman and David Green back on our show. I wanted to share a few screenshots. I was able to join Peter Tuchman, David Green, and some of the amazing folks over at Apex Trader Funding yesterday live on the New York Stock Exchange, the floor. We also went to the NASDAQ where they had some great billboards put up. Here's me, Peter, and David. Here is me and Dan Cook from Apex, me and the Apex team over under the bell. And of course, they had some great billboards put up for Apex Trader Funding and Wall Street Global Trading Academy, which is Peter Tuchman and David Green's community. See right over here, they had their banner up here on the NASDAQ, and they had a few billboards as well over here on the Reuters building. This was a great experience. So awesome to see them. Couple more, just some selfies, me, Peter, and David. They are real, guys. You might only see them online, but I promise they're real. We'll get into the 30% rule in a little bit. No, guys, Apex does not have options. I mentioned earlier, Apex is futures only. So let's get back into some technical analysis now, because markets have been giving us some wild chop. And what do I mean by that? Well, what I mean by that is every time buyers try to take us to new highs, sellers are able to step in and bring us lower. Every time sellers try to bring us lower, buyers step in and try to make sellers struggle, or at least give us more range-bound price action. And what do I mean by that? I mean this right here. So as we see on our replay mode, if we turn this off, this looks like it was a clean trend. Now we were able to come into this old resistance level. So as we know in previous sessions, I've taught you guys, old resistance becomes support. So now we came into a support level and sellers failed to continue us lower. But not only that, buyers failed to continue us higher. Buyers tried to take us out of this zone right here, and they failed. They tried again here, and they failed. And each time they fail, look how much stronger the sellers are. And just one candle was able to take us 6.25 points, which really isn't that much on the ES. But it took us 3 candles to get up that high. So sellers are very quick on the move lower right now. Yeah, so right now, Graham, that's a great question. He was asking why the Nasdaq might be down today. So we could start with the Nasdaq today, guys. Usually we start on the S&P 500. But what I like to do, guys, is I like to look at our daily time frame. So let's do a top-down analysis so I could give you guys an idea of what's really driving the markets this past year. So the first thing that really gave us the sell-off from all-time highs was our tariff worry, right? There were tariff concerns. We were worried that, okay, Trump said he's going to start to throw tariffs on Canada, Mexico. I believe there was one other place as well. He mentioned at that point China was not involved. So Canada and Mexico were the main two countries we were looking to tariff. And because Canada gives the US, so 60% of the US's crude oil inventory is supplied from Canada. So if we were to tariff them higher, even though this is the Nasdaq, not crude oil, as we saw S&P 500 also sold off from those highs with that tariff worry. Guys, when you hear tariffs, a lot of people disassociate it from anything of meaning at this point because they keep getting pulled and keep getting pushed back. And we'll talk about that briefly in a little bit too. But tariffs really just mean trade, right? A tariff is a trade. It's a tax on trade. So it makes trades higher, right? We saw that there was even a surplus I think it was the past month or year over year, we had a surplus for the first time due to the tariffs creating the other countries to have to, yes, pay more. Now, yes, that will sometimes reflect on us and it will reflect on the consumer in the sense that prices may go higher. And that sort of is what drove down this huge sell-off. Guys, from February 18th to just April 7th, we sold off, this is 27% on the NASDAQ to the downside, from high to low, 27%, nearly 30%. Since Trump announced this was our quote-unquote Liberation Day, then Trump announced a tariff relief. So this was our first tariff deal, right? So tariff relief right here, we'll call it tariff deal 1. And it wasn't even a deal. It was Trump announcing that we're going to do a 90-day stay. So 90-day stay on all tariffs on all countries except for China. So what happened? Markets gave us a reaction, a 10% move. We saw we moved down 30% over the course of, what did we say, like 2 months? 48 days, so not even 2 months. Then we had a 10% move in one day. 12% move on the NASDAQ. It was 10% on the S&P 500. 12%, 2,000 points on the NASDAQ in one trading session because of that tariff news, right? This was also when Trump announced on Twitter, now looks like a good time to buy. And what happened? Markets reacted. Markets didn't react because he tweeted that. Markets reacted because of the tariff deal. So markets gave us a beautiful reaction, a beautiful reversal. I had this point as a point of resistance that I said, okay, guys, I'm bullish on this reversal right here, but I'm going to believe and really have strength in a bull market once we're able to break above this resistance point, above this 20,000 key psychological level. I mentioned pretty often in these live streams, guys, that when we're at all-time highs, because we don't have any historical levels to work off of, we want to mark off key whole numbers because these work as key psychological levels. So let's click this. We'll go to coordinates. So right now, this would be one. We'll do 23,375. Then the next one, we could do 23,400, and we could go by 25 increments on the NASDAQ because it moves so volatile, right? And that's how we could find key levels going forward while markets are still trying to move higher. Now, remember, guys, right now we're looking at a daily time frame. When we're day trading, we're looking at a 5-minute, a 15-minute. Some people look at the 1 minute. But right now we're on the daily. This gives us an overall trend, an overall directional bias. So tariff deal 1, what happened over here? This was our second tariff deal. This is when Trump announced that, okay, China's up, China's turn. We're going to do another stay on China tariff deals. Same situation happened. Right there, China tariff stay, same situation, 30 days, and that pushes us to July. Now it's the end of July. They pushed it back one more time to August 1st, then to August 12th, and now they're going to be speaking with China next week, which can yet again move back our tariffs. Guys, that is moving them back all the way from April to July to August to now potentially September. How far back do we have to keep pushing these tariffs before we have some type of consistency in the market? Now, something I want to point out is there is no doubt and there is no debate that markets have been bullish since April. Yup, that's right, Quantum, great point. So Japan, there was a tariff deal made with Japan overnight. They are hitting them with a 30% tariff. They said that it is no worse than any of the other countries. So the question is, could that be a sign that we had our deal with Japan, that we're trying to make our way with making deals with other countries? For example, most important one really is China. That's where we get a lot of our resources from here in America, a lot of our supplies, a lot of our inventories. So that's why it's so important. That's why Canada was so important, because of the oil. We were able to reverse on tariff stays. We were able to continue back higher off of that. Tariff deal number 1 gave us a strong reversal. Tariff deal number 2 helped us continue in our trend. Now at this point, this is where we're saying, okay, well, I don't know. Markets are saying, well, I don't know right now. Do we want to continue higher? Do we want to come up with a new deal? Or do we want to stay range bound? So something I would really look for on the NASDAQ here, guys, is I'd really look to see if it does want to break below this 22,780. Now, this was a prior pivot from a high, and it has been working as a support level. So that's what makes me think, okay, let's keep an eye on that level as support again. Because right now, if we're zooming in, now's the time when we zoom in. We were talking about the daily time frame before. We were talking about moves all the way from February to April to July to now. Now, as day traders, like I mentioned before, now it's time we zoom in. Because right now we're looking at 75 bars of daily candles. And as day traders, we're usually on the 5 and 15. So that would be hundreds of thousands of 5 and 15-minute candles. So now let's start to break it down. We go down to a 4-hour time frame just to sort of get general direction. And if we want, guys, if you guys are a bit of a newer trader and you're having difficulty spotting direction or trend, use the trend line tool, and you could plot it from highs. So you would do from pivot to pivot. So here's a pivot high, another pivot high. So I see that we're making higher highs. And another way you could help yourself out with this is to mark out those pivots to the right. I'm just going to get rid of that arrow on that as well. Going to turn that off. And now we see, okay, well, we took out this high right here. That made a higher high. That's a bullish sentiment. I see we held this low right here. That's a higher low, another bullish sentiment. That right there gives me the general bias of bullish on this day on NASDAQ, and that would have worked out very well off of the 4-hour time frame bias. Now, same thing over here. We took out highs, we're continuing higher, but at this point, right, markets opened up, and we failed to find good volume. Volume came in, that's right, volume came in, but it wasn't buying volume, and that's something we can most likely see if we zoomed in a little bit lower on the time frame here. So let's check out a 30-minute time frame. We're going to zoom into that area. And as we see on the NASDAQ on that Tuesday, this is Tuesday, July 15th, it was very poor price action. We broke that recent pivot high, but we kept failing to continue higher. But we kept failing to continue lower until we were finally able to squeeze in the afternoon for a power hour move. As a lot of you know, the power hour and the New York session open for the first 2 hours tend to have the most volume and volatility. Something to mention, guys, just for you guys to keep an eye on as well, is a lot of times when markets give us a lot of range in that first hour, or even if it gives us a range for the whole day, what we can look for is that power hour to finally give us a little bit of a move, right? So a lot of times New York session, ES, NASDAQ, they have to have some type of volatility and movement behind them in order to find some follow through and volume. So if the whole day was range bound and we're coming up towards, this is our 2:30, here comes our 3 o'clock, 3:10, 3:20, we were making our way lower. This was the last time buyers tried to step in, and then they failed. What happens when buyers fail? Well, sellers win, right? Because we have to remember, guys, markets can only go one of two directions. They either go up or we're going down. But if we are unsure and we are at an area that we don't know because we're range bound, because we haven't been able to find any proper support or resistance, that's how we know we should be staying out of the market. So let's, again, taking a quick look at NASDAQ here. We'll come back to our daily, looking at our price levels. We can mark out some more key psychological levels as well. We're going to clone this one right here. We're going to put this at coordinates, and we're going to put this one at 23,400. Very close to 75. I'm most likely, because of how close these price levels are. So this is another thing we can do, guys, because we're looking at the NASDAQ here and we see how volatile these moves are. And I say we can see it because what we're doing is we're looking to see the price action and we're looking to see the price as well. So right now I see that a lot of these bars are giving us about 100 to 200 point ranges. So to have a key level that's only about 25 points away might not be that sufficient. So instead of having it every 25 points, we're going to have it every 50 points. So here's 23,350. Then the one under that is going to be 2,300 even. And again, it might look like it's throwing a lot of lines on our chart, but we have to remember this is on the daily time frame, and we're going to be trading on a lower time frame because we're day traders. So here's our 2,300. Get that down to 2,300 right there. And then we could throw out one more key level as well. We'll throw some more to the downside now. So here's 23,100. And like I said, we could also mark it by the 50. So 23,100, 23,150. These are key levels that we can use going forward along with any supply, demand, support, and resistance. So here's 2350 right there. And just like that, look at this, guys. If we're looking at our price action, we'll delete some of these older white lines that we just created for directional purposes as well. We can see how well those blue lines are working as support and resistance. When price is below 23,100, 23,150, it used it as resistance once, twice, almost 3 times there, another time here, another time here. Then when we're above it, it holds it as support. So right now we're definitely running into a bit of a tough spot, and we want to see how markets develop. Now, Quantum makes another great point. Earnings and tariffs are running the markets right now. So not only do we have tariff uncertainty, but big tech earnings are stepping in this week. Today, guys, after the bell, I believe we have Google and Tesla earnings. I'll be covering Tesla earnings. Yes, we'll be covering Tesla earnings today here on Benzinga. So make sure you guys tune in later. What's going on, Oz? How's it going? Hope you're all doing great. But let's see. But we'll take a look. We'll take a look at Tesla earnings. Maybe we'll look Google has earnings as well. We'll see if we can get our good buddy Paul Meeks on as well. He does great when it comes to breaking down some tech analysis too. So we're on our daily. We see our range on NASDAQ. We see that we have been making higher highs, so we still are in a bull trend. However, market sentiment, market direction, and overall market price action has been range bound. We move higher, we pull back. We move higher, we pull back. We move higher, we pull back. There is no continuous trend, right? When we look at a trend, we're looking at something like this, where we have a nice trend, we break previous day high, we continue higher, break previous day high, continue higher. This was a bull trend for eight bars, 8 trading days. It was a clean bull trend to the upside where we just kept breaking previous day highs and closing green. Now, just because we break previous day high doesn't mean we have to break previous day high and close above previous day high. It just means that we look for us to close green on that daily time frame. Now, at this point, right, we had the same thing here. Previous day high was broken and it closed green. Previous day high broken and it closed green. And this was a trend for about 5 trading days. It had one little leg of a pullback and then it had 2 more green days. That's a clean trend in the market. Something like this is an undirectional market, right? And we don't want to be trying to force anything. So as day traders, what do? We take advantage of the range. We understand that we have to capitalize on scalps or look for price and look for points where there are pain points in the market. Now, what do I mean by pain points in the market? Well, I basically mean any pivots on a 15-minute, on a 30-minute, and of course, any of those key psychological levels where people might have their stop loss set. Remember, guys, we're trading against millions of other people, right? We're trading against some of the smartest people in the world even. But I don't want you guys to think, oh, well, I'm trading against them. They have to be wrong for me to be right. It's absolutely not right at all. We could trade with them, right? Where we're buying with volume. Volume moves the market. So we could use a tool sort of like I have a tool called Bookmap. And oh, wow, we just had a spike right there. Oh, yeah, look at that. Beautiful. Look at that spike. An imbalance of a spike. We have low volume up here on our RTH volume profile. This might be a pretty good example. I would like to see markets come reestablish 63.70 and find a base to move higher. So, guys, we might be able to find a trade set up here on ES given the right opportunity. Right now, though, we are looking at the NASDAQ and just looking at these key levels. So yeah, Graham has a great question. He asked, does the Japan deal not affect many stocks within the NASDAQ, which is why it has gone down? So yes and no, actually, Graham, that's a great question. So because NASDAQ is mainly our tech index, it has a big move and it has a big impact on our equities. And that's going to be these 6 right here, not so much Tesla on the bottom left. But when we're looking at them, Meta, Microsoft, Apple, Amazon, and Nvidia are all major holdings on the S&P 500 and the NASDAQ. So once we see a strong trend in these, we're able to find some confidence in the NASDAQ as well. As we see, most equities are continuing, and I'm thinking that we're probably going to, continue higher on NASDAQ too. So guys, we have to watch and make sure our equities are trending with our S&P and NQ. Beautiful bull move right there. Look at that, guys. We are running, and look at that, right off of key psychological level 23,150. It's a level we just marked out before. You guys saw me mark it out live. Let's see. So, guys, ES and EU close to a 15% tariff deal that just came in right now. That's what came from that market reaction, guys. Guys, I know you're going to hit that like button because you heard that here first, live on Benzinga. It's what we do. When we're live and something comes out, we make sure you guys hear that news immediately. That's our goal. Our goal is to bring you the best trading information, the best strategies to use, and what educational systems to use, right? Sort of help you guys gain traction in your trading journey, but also what news can affect the market too. Says they would waive some tariffs on some products, including aircraft, spirits, and medical devices. So guys, it's still developing. We're going to get news on that. And if I see anything major, I will keep you guys updated. As long as you hit that like, hit that subscribe, and fill out the form, guys. Fill out the form for a chance to win a free Apex Trader evaluation account. Guys, they are the #1 prop firm in the industry. They have paid out over $500 million. Apex Trader funding right here. You're going to use discount code FFEVER for 80% off. Now, if there is no sale and you use discount code FFEVER, you're still saving 50% off. So you'll never pay full price. So make sure you use that discount code. Make sure you fill out that evaluation form in the comments. And when you fill out that form, if you win, you get the chance and opportunity to pick any account you want. You could pick a Wealth Charts plan, you could pick a Rhythmic plan, you could pick a Tradeovate plan, and you could pick any account size you want as well. Guys, I'd usually recommend, if you're a newer trader, you're trying to find a system that fits for you, I usually recommend getting started with somewhere around the 50K account size. I know it's got a bit of a larger profit goal than the 25K, but it gives you more room on the trailing threshold. Yeah, I know, Quantum. A free funded account sounds great. So you win the free evaluation account. If you pass it, you do get the funded. But I do believe you have to pay for the funded when you pass it. You just get the free eval. But it's still a great opportunity to trade markets and prove to yourself that, hey, you know what? I'm getting the hang of it. I'm able to risk 150 to make 450. I'm able to risk 200 to make 600. Now, if you're trading a 50K account, this is where the account sizing comes into play, where I have some, let's see. Oh no, I deleted the account sizing tab, but here is the 30% rule. This is another big rule for Apex Trader funding. So a lot of people worry because they have a 30% rule, and that basically means you can't have more than 30% of your total PNL at payout to come from one trading day. So let's say you have a 50K account, you're 10K in profit, you're going to withdraw your 2,000, which is the max you can withdraw on the first 5 payouts on a 50K. But one of your days you made $4,000 on a $10,000 PNL. Well, that's 40%. That's above your 30% rule. So here is how much you would risk for those 30%. Actually, no, let's go over the example first. So an example right now would be a 50K PA, right? Let's say you get started on a fresh 50K account and your best profit day is $2,000. Let's say the first day you made 500, the second day you made 500, third day you made 2,000. Okay, well, here's how you would calculate it. You would take whatever your biggest day is and divide it by 0.3. What that's going to do is it's going to reverse do the math and tell you what would make 2,000 30% of X number. So right now it's telling me on this 50K account, if my best trading day was $2,000, my total PNL when I go for a payout has to be at least $6,667. This means your account must show a total PNL of at least that 6667 to remain within the rule's limits. If your total profit is below that, a lot of people get concerned, they get worried, they deny my payout, my total profit's below that, I don't even want to request it yet, they're going to deny it. That's okay, guys. Take the next day, take the next few trading days, however long it takes to fix it. Trade, get your profit higher. Let's say I had a $2,000 day and my total P&L is only $5,000 and I'm off $1,600. Okay, well then I'm going to carefully trade the next couple of days, keep my risk small still. If my goal is now 1600 and I want to maybe risk 200 per trade, risking 200 to make 600 because I like to look for at least a 3-to-1 risk to reward. Well, that's going to help get me to that total P&L in just 3 or 4 trading days, depending if I take losses or not. Or if I take multiple trades, it could take even less time than that. But something I really want to emphasize is that they're never going to deny your payout and then tell you to leave, right? They're not going to deny your payout and keep all of your profit captive. No, they give you the opportunity to continue trading until you meet the right standards and the right rules. Trailing threshold, guys, the initial trailing threshold is used to calculate the risk limit regardless of whether the threshold has been adjusted. So even if your trailing threshold decreases, your risk limit still references the original starting amount until you exit the safety net. What do I mean by that? Well, let's say you're on a 50K account and you lose $500. You don't get a smaller threshold and you don't get a smaller 30% rule. It stays the same as if you're still on an even 50K account. So once you exit, trailing threshold stops, the rule shifts to 30% of your start of day profit. So instead of a trailing threshold, it's a 30% of your starting day profit. If your account doubles its safety net, it allows drawdown to increase to 50%. So an example, on a 50K account, if you accumulate 2,600, which is the minimum you need to withdraw $500 in profit and pass the safety net, your risk is calculated based on 30% of the 2,600. Once your profit increases to 5,200, your drawdown can go to 50%, which is now 2,600. So guys, you increase your profit from 2,600 to 5,200, and now you could basically risk that full 2,600 on your next trade. Is that a good idea? I'd ask you guys in the comments, but I really hope you would say no, because risking 50% of your account size is never a good idea. Minimum required balance. So guys, this is the minimum required balance to withdraw the minimum payout. So the minimum payout, guys, on Apex Trader funding for every account is $500. So for a 25K account, you need to bring it up to 26,600. That way you withdraw 500, you still have $1,100 of cushion. 50K account is 52,600. Same situation, you just got to make an extra grand. Then you go withdraw 500, you are left with $2,100 in your trail stop. And then so on and so on for all these other accounts as well. So the maximum payout, you're able to take out $1,500 from a 25K account. Guys, let's put that into perspective. If you buy a 25K account right now on sale for $29 down, okay, that's your first payment. Let's even be a little more realistic with some people, right? Let's say you blow that account and you buy another account. All right, now you're spending $60, but now you're given another opportunity. With the sale they're running right now, where it's $140 for every lifetime performance account fee, that brings your total of your own money you're spending just $200 to get funded and be able to risk upwards of this is on the 25K account, $1,500. So you're putting 200 of your own capital down and you're able to risk 1,500 of the Apex account. And again, when you're trading that Apex account, if you blow that 1,500, they're not going to come after you for it. They're not going to penalize you. They're going to say, that's okay. Go try again. Do you want to reset the account? Do you want to buy a new evaluation? If you need anything, let us know. They have a great support staff. And as you guys see with the shows that they have here on Benzinga, they're all about helping you guys further your education. I'm here right now, guys, for you all because of Apex and, of course, their collaboration with Benzinga to help you guys further your trading system. Now, some common questions on Apex, and then I want to get into the trading strategy, the gap fill. If you guys have heard of the gap fill, let me know in the comments. I do want to know if you guys have heard of it. So the first question was, do I have to trade 8 days in a row? First off, guys, to take a payout from Apex, you do have to trade 8 trading days. It does not have to be in a row. You could trade 3 one week, 3 the next week, and then 2 the following. You could trade 5 days one week and then just 3 days the next week. You could do 2 days one week, 2 days the next week, and just do 2 days every week. Whatever you want, take your time with it. There's no time frame on it. It's okay. When do I qualify for 100% payouts? So after your 5th approved payout, starting on your 6th, there is no payout cap. So let's say you're trading a 50K account, and if you have been trading it for the amount of time required to hit 5 payouts, you should have been able to grow it pretty well. So let's say you grew that 50K to $90,000, $40,000 in profit. You're not able to take out that 40 just yet, but once you hit that 5th payout gets approved for $2,000. The next payout you take, let's say you do have $4,000 above your cushion, you're able to withdraw that whole $40,000, right? That's huge. That is fantastic. It's huge. And again, we have to remember, let's say you were on 10 50K accounts, 40,000 across 10 accounts is $400,000. Say you're on 20 50K accounts, you're looking at $800,000. Guys, this is a very big number. For most people, it's a life-changing amount, and Apex gives you that opportunity to trade with that amount of capital without risking your own capital to make that amount of money, and that is huge. It's outstanding. Right now, let's think about it. We'll say $33 for a 50K account. So 33 times 20. 33 times 20. So that is just $660. Then let's say all the price action fees, the PA fees, we'll say you do the monthly for $100 a month times the 20 is $2,000. So realistically, you're spending just $2,600, but then you have copy accounts, 20 copy accounts. Again, that means your first payout of the $2,000 that you make across 20 accounts is going to far surpass that $2,600 you just paid. Let's say you have the 20 accounts and you're getting that $2,000 profit from your P&L. Well, guess what? That's $40,000 right there. Not only did you make your money back from the investment, but now you're deep in the green, you're profitable in your trading, and you're able to continue and take another payout like that and another payout like that. Apex is phenomenal when it comes to that. How long do I have to pass the evaluation account? Guys, as I mentioned on the first question, there's no time frame. You take as long as you want. There's no time limit. Take as long as you want. Take a day to get funded. You could take 20 days to get funded. You could take 2 months to get funded, but take your time. Is there a daily loss limit? So guys, a lot of prop firms have daily loss limits, and it really does throw off traders because once they hit their daily loss limit, they're completely locked out and they're not able to take any trades anymore. We should be able to, as traders, give ourselves that standard. Well, with Apex, we are able to give ourselves that standard. There is no daily loss limit, but you do have to follow the trailing threshold and the 30%/50% risk rule. So again, overall, that 30% rule, guys, is made to help us retain our profit. As traders, our goal isn't just to make money. Our goal is to protect our capital and hold on to that money and be consistent. Do commissions count towards the trailing threshold, guys? Of course they do. If you were trading your own account, commissions are going to have an impact on your P&L. Does it have that big of an impact where you're up $2,000 but commissions take off $500? It really shouldn't, unless you're taking maybe 100 trades a day, right? And you're taking 100 trades a day on like 20 contracts each trade in, trade out, trade in, trade out. Those commissions will add up. If you're trading pretty consistently, you give yourself 2 to 3 trades a day, you're not going to see the commissions really at all. Can I hold trades overnight or over the weekend? So you can't hold trades from the futures close, which is at 5 p.m. Eastern, into the futures open, which is 6 p.m. Eastern. That would also be Friday. The futures market closes at 5 p.m. Eastern and doesn't open up again until Sunday at 6 p.m. Eastern. Cannot hold trades into futures close. However, let's say futures market opens Monday night at 6 p.m. Eastern. You could hypothetically enter a trade at that 6 o'clock and then hold it until the New York session opens the next day, because the futures market is open 23 hours a day. So just a note, just something you could consider as a swing. When are payouts processed? So guys, there used to be a payout window. There's no longer a payout window. That was actually quite some time ago now. But as soon as you request a payout, it's submitted, it's reviewed immediately. And of course, how can I link TradeOvate to, and I guess, can I link TradeOvate to TradingView? Yes, of course you can. And that way, when you do that, you're able to place your trades right here on the TradingView chart. So guys, let's take a look at the NASDAQ here, and let's take a look at gold. Gold was near all-time highs not too recently. This was about in April as well, late April. So let's take a look at gold, because gold has been finding some momentum due to all of the uncertainty in the economy, right? Now, what does uncertainty do to gold? Well, gold is considered a safe haven asset. So what happens when there's uncertainty in stocks and in the market is gold tends to perform better. Now, right now, we see gold is pushing lower on the daily. And if we look at NASDAQ on the daily, NAS is trying to push higher. And I'm sure if we looked at ES, it would be doing the same thing. Now, I don't want to confuse anybody. That doesn't mean that they go inverse from each other. Sometimes gold can go higher while the S&P 500 goes higher. It's not something that happens often, but it can happen. They aren't in perfect inverse like the VIX and the ES are. However, it's more of a market sentiment trade, right? So if I'm looking for market sentiment and I'm looking at gold, I see very clearly since the beginning of April, we have been within a range of 32.25 and 34.50 on gold, right? So it's a pretty big range. It's a tradable range, 245 points, very tradable. Look to short the highs, buy the lows. Simple enough, right? Well, that's when a trading strategy would come in. So let's take a look at the ES, and I want to show you guys how to use the gap fill trading strategy. So let's pull up the ES over here. Let's see if we have any zones I got to delete. These were some setups we were looking at in our community over at Bullish Bears. And let's see. So here is ES. Now, guys, how you would find the gap fill. The gap fill basically means, and this is a trading strategy that a lot of people implement on stocks, and they would use options to trade them. So gap fill is basically wherever the market closed yesterday, or the New York session market closed yesterday, and then opens the following day. So yesterday, what we would do on a 15-minute time frame, and you could find it anywhere, 15-minute, 5-minute, 1 minute. What we're looking for is the close of that candle that goes into the 4 o'clock. So right now we have our 3:45 candle, which means it closes at 4 o'clock. So we're going to mark out that close of the candle. As you guys see, I already have it saved. It says gap. So I could say, okay, well, now I'm looking for a gap fill. Right now, when markets opened, we had a 0.42% size on our gap fill. Now, there is a tool called Edge Fill, and that actually gives us the statistics behind each gap we see. Let me see if I could pull that up real quick for us. It's, again, a great system. Here we go. Perfect. So here we have the ES gap fill. This is Edge Fill. You guys use discount code Bullish Bears. I believe you get 10% off, 20% off. You get a discount. 100% gap fill on ES, right? So if we could do standard, and we're looking at the ES gap fills, and it tells me a gap up gets filled 63% of the time, a gap down fills 61% of the time. So overall, a gap fill trading strategy does seem to work over 60% of the time. Anything above 50% is something in our odds. Now, what we can also do is we can look at the streaks. So the last 5 gap ups happened on the 16th, the 17th, the 18th, the 21st, and the 22nd. Each of those gap ups got filled except for one, so 4 out of 5. That would be more in our favor. Our gap downs, only 3 out of 5. That's a little less in our favor. Now we can also look at them by size. So we can come over here to choose sub-report and do by size. And remember, I marked out this is a 0.42% gap fill size. Now I could see, okay, well, ES, when it has a 0.0 to 0.19%, we have a really high chance of filling that gap. That means the gap fill is very close, maybe just a couple points away. Once we get a little higher to 0.2% to 0.39%, it sort of starts to decrease, but still very much in our favor. 81% on a gap down, 78% on a gap up. Again, almost 80% on gap ups too. That's really in our favor to say we're probably filling this gap fill. I would like to see this continue. Now, once we hit our 0.4 to 0.69% size, look at the difference. Look at that, guys. 80% not filled for gap up, 71% not filled for gap down, and that 80% saying we're not filling it is basically right here, right? So we had our gap fill price at 63.46. We sold off to a key level, which was previous day high, and we held it as support before we finally reversed on the S&P 500. Now, you could use that gap fill as sort of a way to target and say, okay, well, I want to see and make sure, okay, if it's more than a 0.40% size of a gap fill, I want to see if we could dip first so that I know traders are trying to fill the gap, and I want to see if we could find a key level or a level of support before we fill it. Because if I know that there's an 80% chance that we don't hit this price level, then I want to trade away from it, right? And I want to try to get in along as close to that price level as possible, because I'm going to be using that as my stop loss because it told me there's an 80% chance it's not going to be hit. So wherever you took that trade, you could have maybe taken it over there, target new high a day. That's a 2-to-1 risk to reward right there. Me personally, I usually wouldn't have a 10-point stop loss on the S&P 500. At this point, I would do something a little bit that I like to call sort of like a time frame analysis, using different pivots and using volume. So I'd use my trend line and look to mark out our most recent pivot. That's this one right here. This could now also work as a possible stop loss target. Or I could use, of course, like we mentioned before, a tool like Bookmap that shows us volume by price and price levels. So let's see when we hit at 10 o'clock, 63.53 on the S&P 500. So here we go, 63.53 right over here. It looks like we had an aggressive seller into some strong active bids. When we have active bids like this, guys, we have heavy levels. These red levels on Bookmap are heavy levels because it shows more volume. These are where we usually get these reversals, right? So if we could find an active bid and strong buying like that near key levels, we could look, we could look to find our fills down here and see if we could find some support. Once we're able to fill these bids and we're able to reverse back higher, we would wait for us to get back above it, which we did right on this rally. And then we'd wait for a pullback, which we had right over here, and then we continued higher. So this probably would have been around my entry point on the 63.50 over here. Now this is our 10.04, 10.03, and then here is during our 10.15 candle right over here. Oh, you know, let's go to the 5-minute so we can see it a bit more clearly. So look at that. We had our rally, our pullback, and then our higher low and continued higher. So again, using volume, using price analysis, and then using a gap fill trading strategy, was able to say, okay, there's a good chance we don't fill this gap. I want to see us continue, and that gives me a bullish sentiment, right? And that's a great strategy to use, the gap fill trading strategy. I'll give you guys another example of it and how you guys could find it. So let's say we wanted to find the gap fill for this day. We would scroll to the left. We would find where our close was from yesterday. Now we're on the 5-minute. So I'd find the 3.55 candle. Guys, I wouldn't mark it on the 4 o'clock candle because sometimes, very, very rarely, we will gap from that 3.59.59 close into 4 o'clock for like a point or like a couple ticks. And it throws the gap fill size off very small, but significant enough that we might as well just go with what we know works, and that's going to be our 3.55 candle close. So here would be our gap fill on from, this is Monday into Tuesday. So we go to gap, and as we see, this was a very small gap right here, guys. New York session opened right there. So here's our open price. Mark that as our open. Our gap fill was only very small. 0.05, 0.04. It was only not even 3 points away. So that would give us directional bias to say, okay, we're opening a few points away. That's an easy gap fill. We're probably going to fill that. Now, does that mean you have to go short as soon as the market opens and target that gap fill for not even a 0.5 to 1 risk to reward? Absolutely not. But it can help you with bias of, okay, we traded near that gap. We're pretty range bound. We didn't get any clear direction overnight. Let's see if we could trade back below that gap. And once we can see that we have selling pressure broke us below our gap price on our first candle of the day, we pulled back to our open price to reestablish any unfilled orders. And then once we started to sell off again through VWAP, that's when we're able to see, okay, this might be a good selling opportunity, because now at this point, we sold off once when the New York session opened. So think of it like this, right? Sellers, they're showing their hand. They're showing that they're active in the market. So when a buyer pulls us back and we see that the volume was weak on the pullback, we can look for us to continue lower from there. So again, that's also a good way to use the gap fill to understand if we're opening really close to our gap fill price, look for continuation towards that side, or even look for range bound price action. As we see, we had this leg lower, and then after we had that one move, we stayed range bound this whole entire day, guys. We had one leg here from 115 to 125, and I wouldn't even call that a leg of price action. That's 10 minutes, 10, 15 minutes right there. That is not a strong move. Same with this one right here. Yes, it moved 24 points to the downside, but 24 points isn't that big of a move on the S&P 500. We've been seeing moves 40 points, 50 points, on really strong days, 80 points. So 25 points, really not that strong of a move. It's important that we measure out how big our candles are to give us an idea also of what we should be expecting in the market. Because sometimes it's okay to have a 2-point stop loss on the S&P 500. It's not that small of a stop loss. It is a good small stop loss, right? It's reasonable depending on market conditions. But let's say this range was much wider. Well, then maybe I would have needed a 5-point stop loss, and then I would need less contracts to risk the same amount. So make sure that you guys pay attention to that. And we want to make sure that open price is a key level we mark out every day. Previous day high and previous day low is another level we want to mark out every day. So that was our gap fill. And we also see, guys, here's something else that's great. Our gap fill from this Monday close lined up close marked right with the gap fill of the next Tuesday's close. So again, talk about range bound price action. This New York session basically opened and closed at the same place for 2 days. I like that Bookmap shows who's waiting in line. Yeah, it's great. Bookmap is a fantastic tool. Like I said before, use discount code BullishBears on Bookmap to save 20% off on the monthly. I think 20% off on the lifetime too. Always looking to get you guys some good sales. Let's see. Let's take one quick look. We're going to wrap up the live, guys, in about 8 minutes. So if anybody has any last-minute questions, you want to cover any strategy, there's opening range breakout, there is the gap fill, there's supply and demand, there's all different strategies. But something you need to remember as a trader, guys, is you need to stick to just one at the beginning. To jump around strategy to strategy, that's called strategy hopping. And what happens then is you lose sight of any type of consistency, and then you end up in this circle and in this big abyss almost of trying to figure out, should I go long on this VWAP trade? Should I go short off of supply right now? Oh, well, the moving average is crossing. Maybe I should. And then when you start asking yourself and telling yourself maybe in the market, that's a big red flag to say, okay, well, then maybe you need to take a better look, and maybe you need to sort of take a step back, reanalyze the situation, and come up with a clearer bias, something that you can confidently say, yes, we're in a nice bull trend right now. No, we're not in a trend, we're in a range right now. Once we're able to confidently answer that question alone, that's when we should be able to put our trade on. Without being able to answer a question as simple as that, where are buyers, where are sellers, where are my key levels, and where am I looking to buy and sell at, should not be taking any trades. If you're taking any trades without being able to answer those simple questions, there's a good chance you're trading just to trade. You're trading just because you want to make money, right? Now, everybody wants to make money when they trade. Everybody wants to make money, period. But when we're learning to trade, we have to understand we're learning a trade that requires a lot of skill, a lot of discipline, and a lot of strength in our mindset. Our mindset plays such a crucial role when it comes to trading that nothing else comes in between. You could have 40 moving averages on your screen, and if you have the right mindset, you could be profitable. Somebody else could have the same 40 moving averages, have a poor mindset, and always just like chasing every trade. They're giving themselves reasons to take a trade. They're over leveraging. If you can't find and follow simple rules within yourself of, I want to risk 150 per trade, no more. I want to take this trade. I only want to take trades off of my zones and levels. I only want to take trades in directional bias if we've broken a previous day high already. Giving yourself this breakdown and this rundown will help keep you not only in the trading game for long, but it will help you profit and help you consistently grow as a trader and as a person. Because when we are working as a trader, we are working against an emotional aspect that we really do have to overcome. That the fear of missing out, FOMO, that's a big deal. That's a real thing. Everybody has it. So make sure you guys check that out. Apex still has that 80% off. We'll bring that up one more time. Let's see. 80% off on Apex Trader funding. They have all different account sizes. The 25K account, you guys could trade up to 4 minis, which would mean like 4 ES contracts. CMG, they have earnings. So we won't take a look at any stocks at the moment. I guess we could do a quick little brief on the stock CMG. We do have, guys, don't forget Tesla has earnings. Thank you, Derek. I appreciate that. Tesla has earnings and Google has earnings today after the bell. Join me, guys, back here on Benzinga at 4:30. We're going to do some technical analysis on Tesla, probably also do a little bit on Google as well. We're going to go over what we should be expecting on the earnings call because it's important to know what happens during the earnings. Let's pull up Tesla right now, actually. So Tesla's been pretty range bound. We'll delete this blue zone for now. We'll keep this red zone. We'll actually make it green because that was an area of support now. Absolutely. You got it, guys. So Tesla reports earnings after the bell. What's going to happen is the market's going to give us a reaction to the earnings. Then what could also happen following is we have our earnings call at 5 p.m. Eastern. When we have our earnings call, that's when we want to listen to hear what direction the company's looking to go in. That's when they could announce robo-taxis are launching a lot sooner. That's when they could announce that their AI humanoid AI is being pushed back a year or two or is coming sooner. We don't know what this company has in store unless we listen to these earning calls and get a better understanding of the company's direction. And these earnings calls, guys, let's say they have no direction, they aren't sure where they're headed, and they sound a little skeptical on the call. Well, that could be a bit of a red flag, and investors might want to sell into that. So we want to make sure that we not only check out the earnings report itself, like if they have a beat or a miss on earnings and revenue, but we also want to listen to the earnings call to make sure that the company is still stable, is still running strong, and so on. So this is Tesla on the daily. Some key levels I have on Tesla are 314.67. And I'm going to keep this here because it worked very well as a key level. Remember, guys, when we're marking key levels, we're not just marking a particular key level. You could use a rectangle tool and mark that range, right? That way you're not trying to trade it perfectly off that level. You can maybe look for the market to react. As we see right here on this day, we dipped below our 314.50. We hit about 311, but then we reversed very strong to the upside till 350. So very strong stuff there. Very great momentum. Tesla coming off the bottom of its range of 290 over here. I do personally like Tesla below 300. So if anything, earnings report wise, I would like to see if we could get a dip lower, a gap lower into tomorrow's open, and see if we can maybe load up on some Tesla around 290 or 300. NFA, not financial advice, just an area that I'm analyzing on the chart as an area of support or resistance. Right now, this blue level we have, this was a point of support when price was above it. Now it's a point of resistance when price is below it. And right now we're trading in that zone going into earnings. So I would expect a gap lower, possibly, or we could get a gap higher and we could use this blue zone as support again, right? So that's another way to find levels of support and resistance without trying to force something or make something happen. So and that's also called a pre-market plan, guys. I'm creating almost a pre-market plan on Tesla here to say, okay, well, I'm looking for either the earnings to gap us lower to the bottom of this range over here and see if we could find some support, because that would also help the S&P 500 and the NASDAQ find support at the bottom of its range. Or he sounds like him. Oh man, I try to put the suppressor on there, but yeah, I got to go feed him in a minute. But guys, don't forget, use discount code FFEVER when it comes to buying an Apex Trader funding evaluation account. And let's see if we can pull that up. Wow, yeah, he must be real hungry. So use discount code FFEVER for 80% off right now. They are ending the 80% off sale in a couple of days, but you do still save 50% off if you use discount code FFEVER, so you're never paying full price. Guys, fill out the form below for a chance to win a free Apex Trader evaluation account. If you're here on YouTube, hit that like and subscribe. If you're here on Twitter, hit that like and share, and join me later for the Tesla earnings report as well. All right, later, everybody.